Chart of the week, low energy investment. So what we're looking at this week is energy capex for the global renewable energy sector as well as the global oil and gas sector. This is an interesting chart with respect to commodity markets, energy security, and the so-called energy transition. Perhaps the most important issues of our time in many respects. It shows in this chart here the capex to assets ratio, so the capital expenditure versus the value of assets of the companies in this sector. And the point of that is to present a standardized way of tracking the pace of capex, i.e. investment in productive capacity across time. So I previously highlighted how the record low pace of capex by oil and gas producers, which we can clearly see here, was a key element in the surge in energy prices. And there's also, by the way, commodity producers in general have been very low on the capex front. Basically, we've seen a global commodity capex depression in this respect, and that's quite a logical kind of flow-on or reflex from the commodity bear market, the structural commodity bear market that took place over the 2010s, and as well as reflecting also generally weaker funding conditions for traditional commodity producers. But probably the most interesting or surprising thing in this chart is how weak the pace of capex has also been for renewable energy. And basically, the investment so far has not been nearly enough to offset the decline in traditional energy capex, and is still overwhelmingly dwarfed by investment in the oil and gas sector. I've sort of mused here that if any semblance of energy security is to be found, either or both of those lines in the chart there need to actually go up a lot, and fast and substantively. And an energy transition, if you have this energy and transition from high carbon to low carbon, if that's to be viable and practical, when we're going to need to see massive and rapid investment in the alternative and renewable energy space. And so, just as a side note too, in terms of what's actually included in that sector, so we're looking at global renewable energy sector. That's obviously strong showing from solar, wind, hydro, those kind of bread and butter elements, but also includes biogas, ethanol, hydrogen, and actually uranium in that is lumped in that sector as well. But there's overwhelmingly the renewables side of things, which I guess the mainstream low carbon energy options. It also includes batteries and infrastructure, so charging stations. But until we see a material turnaround in what we've seen in this chart here, this sort of depression in energy capex, which is quite a significant thing to say. A depression in energy capex when we've just had one of the worst energy crises since the 1970s. But until we see a pickup in that, we're going to likely see a higher floor in energy prices, the ongoing boom-bust cycles. And we just saw a massive boom-bust cycle of investment in renewable energy stocks that was kind of echoing a lot of the different bubbles that we saw in 2020-21. But it's got to be more than a boom-bust phenomenon. And much of that push to carbon zero can only be seen as noise and basically pointless protests in lieu of real action. They always talk about action, but real action is real investment, real steps to commercialization, actual sustainability, which needs to actually feature economic sustainability to be truly sustainable. So it's an important chart for commodities in general and commodity-related sectors in the stock market, but also important on the the geopolitical side of things in terms of energy security and also tracking energy transition aspirations versus realities. So the key takeaway, all energy producers, carbon or not, are massively underinvesting, and the implications of that are going to be clear and echo in the years to come. So if you enjoyed this chart of the week, chat, be sure to subscribe to the channel, but also head over to topdowncharts.substack.com and subscribe to the free chart of the week.